Hi, good morning, everybody. Thank you so much for joining us for SurgeTrader Live. We have a very special guest today, an international SurgeTrader, funded trader from Brazil, Mr. Miha. Miha, how are you? Thank you so much for joining me today.
I'm great, thank you very much. Appreciate. How are you, Corey?
Awesome. Wonderful, wonderful. Yeah, we really appreciate you coming on, sharing your story with us, sharing your story with our traders. I know you've been a huge proponent of SurgeTrader and prop trading for a long time. We want to learn about that aspect of your trading, a little bit about how you educate your students, and then your own personal trading history. So, Miha, before we get into it too much, tell the audience a little bit about yourself, where you're located, how long have you been trading?
All right, so long story short, my first trade was in stocks when I was 16. And
US stocks?
European stocks.
European stocks, got it.
European stocks, okay? And so back in time I didn't know what I was doing, and at 22 I worked through VIP. You know the uncle that knows the guy that knows the guy. So I went to work for a broker called Publicum, and I was trading stocks back in time. And in 2008 I moved to Forex only. So I'm in Forex for the last 17 years. Been of course, the first 5 to 10 years was up and down, burning accounts and so on. Like I believe everybody's journey.
Yeah, of course.
And today I'm coaching students, semi-retired, managing my own accounts, and that's it.
Awesome. Let me ask you this: why did you switch from stocks to Forex? What piqued your interest to go Forex only?
Great question. So, and I know it's going to go into nose to the stock traders, right? When you buy stocks, when you invest in stocks or buy stocks, there are sometimes the reports coming out, right? Like Microsoft has this huge earnings season and so on and so on and so on. And sometimes come the revision, or you have a news that, I'm not saying about Microsoft, just an example. The accountant made a mistake and they really don't have this huge profit, they have a loss. So the stock and value reverses automatically. And talking about Brazil, the market, it's a lot of it's manipulated a lot. Politics inside, and they inflate the news, and I mean, this is another story, another book. Forex, it's, in my opinion, Corey, the most honest market there is, because it's 7 trillion, I believe, 7 trillion today. So how are you going to manipulate 7 trillion per day? This was one. And number two is the 24 hours. Now crypto is also a new market, it's 24 hours, but back in time we didn't have crypto, so it was stock market from whatever might be the case, 9 a.m. New York time maybe to 5 p.m. New York time.
Right.
But Forex gives you the liberty to work at 11 p.m., 2 a.m.,
Good. Those are both excellent reasons. Do you do any stocks now at all, or are you strictly Forex?
Strictly Forex.
Got it. And then a little bit of crypto, you said?
Investing, learning. Like I consider myself an old guy, so I have the younger student. Oh, it's just this and that and blockchain, and what blockchain?
Yeah, I know. It's an entirely different language.
Yes.
Starting out from stocks and then going to Forex, you probably had to learn a lot of different stuff. How did you tackle that? What was the process you took to leave stocks and head over to Forex?
Like everybody else, I believe, online searching or who knows who, and was like education, like everything else, right? And just to be clear, I don't have anything against you hate stocks. No, it's
no, of course.
But
just for you, Forex is a better fit.
Exactly, sure. But also honesty, it's. I mean, it doesn't happen a lot. Like the company would falsificate some documents or something. But it happens, so.
Right. Right, of course. Yeah. Well, again, Forex is more of a macroeconomic play, and then these companies, they could have internal fighting and be the stock goes down because of stuff that's totally unrelated. So I definitely see what you're saying. There's a lot of risks outside of this traditional macroeconomics.
Unless you're the owner of the company that emits stocks, and
sure. Of course. So tell me about your journey, whether it was stocks or Forex. When you got started, you said it was online searching, it was reading books, talking to people who were trading. What did that process look like? Tell me some of the road bumps you hit, because we have a lot of traders who are just now approaching that, and it's a challenging phase.
All right, very good, excellent. So if you're in the markets for 10 years, 5 years, then most likely you know a lot, right? A lot of fundamentals, a lot of technicals, some people to the level that they can teach, right? And this was me back in time. And Van Tarp, Dr. Van Tarp was one of my mentors. He's gone now, he's dead, but he was like a totally honest guy, you know, and he challenged me, and in front of the audience one day he said, you know, you are really stupid. In front of everybody else. We were in the course and he challenged me. And I said, no, I'm not stupid because I'm teaching, you know, and ask me anything about trend lines and Fibonacci and so on. And he said, no. You are really stupid as a trader. So what does this mean? You can be a great speaker online, TikTok, YouTube, Instagram, right? And you can really know a lot, but still no money in the bank. So being a trader, then like everybody else right now, I guess, you know, when you know everything about technicals, when you know everything about number scoring, when you know everything about anything, there is only one small place left that you don't know everything, and it's called psychology. And then with one of my mentors, I start learning about, like, now it's a question, do you believe it makes sense to you, or do you say, oh, this is baloney, you know? So I've learned that your personality must be in synergy with your strategy.
Absolutely.
You know? And then I believe it's a lot of misunderstanding out there, because not everybody, but a lot of people, oh, you can be a day trader and a scalper and a swing trader, proved to not be true. You know, not true, because just a quick example, if you are not patient, right, patience, if you are not patient with your wife, if you're not patient with your kids, if you're not patient with a dog, you kick the dog, and if you're not patient with your colleagues, how can you expect from yourself that you're going to be patient on the chart?
Right.
You know, oh, I'm going to do like you know, oh, I'm going to go on the 4-hour chart or the daily chart. Turns out to be impossible. And vice versa too, if you are not a quick decision maker, you know, like a military man or a policeman, you know, there is a shooting, you don't have time to think, you just need to, it's you or him, you know? Right. So if you're not a quick decision maker, then, oh, I'm going to be a scalper or a trader on the field. You can do this, you can try, but proven contrary, no consistent profits, you know, it's winner, loser, and everybody,
right, absolutely.
You know, everybody in my group that I teach comes to this conclusion, yeah, it's true, you know, my strategy, now it's in sync with my personality, now I'm okay, now I'm more relaxed, now I react in the...
So Miha, are you saying that you teach different strategies to different personality types?
Sure, also.
Awesome, that's great. Too many educators have one strategy and they try to fit everybody into that strategy. And like you're saying, you know, if the personalities don't mesh, there's going to be conflict. So you have multiple strategies, and you find somebody, you say, hey, listen, you're going to be more predisposed to scalp, or you're going to be more predisposed for swing trade, and you help them identify that about themselves.
Exactly. This is the very basic stuff, foundational. If you don't get this, I mean, no chance. My opinion, sure, no.
Sure, of course.
Because if you think it's common sense, right?
Yeah, well, less than common.
If you don't possess a quality, how can you expect to bring this quality in trading?
Right, of course. How did you decide that for yourself? When did the instructor or the mentor, he said you're stupid, and then you had to determine what your personality type was for your trading style?
Oh, this was the day that I like, maybe, you know, not everybody, but I was not coachable in the beginning. I was stubborn, and after that day I came home and I looked at myself in the mirror and I said, you know, the guy's right. The guy's right. I'm all words and nothing to show, and the guy's a multimillionaire. You know, so then everything, you know, starts to become easy. You know, I promised to myself I'm going to shut up and I'm going to just do what he told me to do. And
So did he help you identify your trading style? What came after that?
No, true. Also, if you read his books, he has a lot of these sessions that, you know, he's questioning. You know, okay, what about this? What about that?
Awesome. So, would you say that was the turning point or your aha moment when you said, okay, this is something that could really work for me?
No, the turning point was that and it's difficult for people to understand this, is, all right, are you for real? Are you for it? Because if you ask 100 people on street, do you want to be a millionaire? Yeah, everybody wants to be a millionaire. But when it comes down to listening and learning and consequently doing, it turns out that 5% listens and does.
Right.
And this is the question is, are you for real? Are you genuinely? And it's not intellectual. This is the key. Maybe it's not something that, it's in my conscious mind. It's okay. What is the reason? If you go on the street and ask 100 people, do you want to be a millionaire? Yes, I want. Why?
Right. Everybody. Right. Do they have what it takes?
I mean, there is a lot of it's technicals, of course, but there is a lot of psychology too.
So when you bring a new student on, how do you evaluate whether they have that?
Oh, it takes a long time. It's not one day. It takes sometimes 6 months. And the conversations and the lessons but ultimately, Corey, the numbers tell the story. They open a SurgeTrader account and they put it on. They connect it to MyFXbook maybe. It's a third-party verifying software, and if you are learning, if you are following, there is a saying, trading is a learnable skill. So MyFXbook is going to show numbers. All right, you are doing good. So your strategy is in sync with your personality. But if you just nod the head like this, and maybe you are working hard either, but hard work doesn't work in the financial markets.
Of course.
And my FX book goes down, down, down. There is something wrong, right?
Got it. And now you take that student, you're going to go in and dig into his MyFX book, see what the problems are, and try to resolve those problems, or what's the next step?
Yes, this is so it's a requirement. We say that MyFX book, it's a report card on how you learn. It's a requirement. Otherwise, me as a coach, I don't have any foundation to tell you, maybe we should dig here or
you have no metrics. Right. Report card. That's a great way to put it.
Exactly. Because otherwise it sometimes gets, oh, I'm right, you are wrong, and no, this doesn't work. Numbers don't lie.
Right, absolutely. So for you, let's go back to when you kind of made that decision. I'm going to give it all. You changed your strategy, you changed your approach. What does your turn towards profitability look like? What does that mean for you?
Consistency.
No, but how did you get there, though? The actual, you had a strategy, but you weren't making money. Then you decided, okay, I'm going to put in the work. I'm going to listen to the mentor. What changed?
This is we call this an institutional approach, right? What is an edge? An edge is a statistically proven fact that your strategy through time makes more money than it loses.
Right.
And to come to an edge, you need to make at least 100 samples. What are samples? Samples are trades that have exactly the same entry, exactly the same trade management, if you have it, exactly the same exit. And us changing strategies, figuring out who we are, I'm on the 15-minute chart, oh, it's too fast, now I'm going on the 4-hour chart, takes too long, I'm going on the weekly chart. So many times we're not coachable. I mean, I didn't listen back in time, I was doing, and we have a lot of also psychological issues, and you don't need to believe me, but I'm telling you, we have a lot, and the big one is the money problem, chasing the money. So money is supposed to be a consequence of a well-executed strategy with an edge. If you have an edge and if you execute constantly, then money will come. It's a byproduct.
Right.
But you trading because a candle is moving up or down, or there is a signal, it's a completely different mindset.
Right. So you focus on process, not profit.
Exactly.
Right. So when most people come to you, are they going to be much more focused on the money, and you have to get that part away from them? You have to turn them back towards the process?
A lot of time they need to unlearn. So it depends. If somebody is 6 months in the market, that's easy because he doesn't have a lot of baggage,
right,
a lot of knowledge. If somebody is 5 years plus, then there is a lot to unlearn, and this is the difficult part. He or she, they're in a habit of doing something that they are working hard, but it doesn't work.
Right.
Doesn't work.
Right. Who would you say the best candidate is, or the best personality type is, to bring somebody from not profitable to profitable? What
Oh, there are no
personality
rules.
traits are the best?
There are no rules. Trading is a learnable skill. Doesn't matter how old you are, if you're black, white, yellow, blue. You know, if you're in Brazil, Alaska, Finland.
The main thing is just have to be coachable.
Exactly. Oh, exactly.
You have to be
yes.
able to take constructive criticism and follow the instructions.
Exactly. Exactly.
How many people do you coach at a time? Is it one-on-one? Is it group? Share with me a little bit about your coaching.
Most of them are one-on-one and two groups. About 100 so far.
Oh wow, that's a
Not
large
lot,
amount.
Not really.
Well, if you're one-on-one, and what kind of hours are you putting in with them? Is it a weekly meetup, monthly meetup?
Some of them it's one per week, some of them it's one per month, some of them twice per week. So it depends. It depends on most of them they have jobs, right? So if it's a pilot, it's one per month because he's flying there and flying
Sure.
there out now. If it's somebody else, like it's okay, it's once per week. But the grand majority, yes.
Oh, I was going to say, when somebody comes to you, what do you require that they know beforehand? Can they be purely brand new, or do you want them to have a little bit of experience and kind of know some of the terminology?
So I teach online through an investment bank. It's called Forex Course 101. It's just about technicals, and this is the minimum requirement, you know. But still, you know, if it's fresh new, it's going to take longer. So
Sure.
having a bit of understanding about the markets, and possibly to have a strategy that doesn't need to make any money, because we get then into the details, what makes the edge and so on.
Got it. So they could come to you with a strategy that doesn't work, and you'll refine that strategy.
Yes, sir. Absolutely.
Wow, that's great. That's great. So have you found that, I've spoken to a lot of traders, and I've worked with many traders over the years, and people often say any strategy is a good strategy as long as you could do the off-the-charts stuff right, the psychological aspect of it. What are your thoughts on that?
Well, every strategy is a good strategy if it has an edge.
Right.
If they don't have an
Statistically
edge,
proven edge.
Statistically proven edge. And again, it's common sense, I believe. If you make 200 samples or 1,000, right? It's factual. It's a fact. But until then, you know, this strategy works. All right, how do you know? Show me the numbers.
Right, absolutely. And I'm sure you've seen where people take a good strategy and they could, not be successful with it because of the psychological aspect.
Absolutely. We are on the same frequency, me and you, Corey. Right. Yes.
That's
Sure.
where coaching comes in. I would imagine it's much easier to take a good strategy and get somebody up to speed than take a bad strategy that has no edge and get somebody up to speed.
Well, no, right? I mean, I give my strategy has an edge, and I give it for free to my students. It's nothing special, really. And if you are not a swing trader personality, no money, zero chance. Come again?
Risk
Sorry?
reward.
Well, 1 per 2, it's ideal, and then it's with the market. You know, sometimes you need to manage the position, get out, get in.
And how about win rate?
Win rate 60%.
Okay, good. So with an almost 50% win rate, you're seeing many people with profitable accounts.
Exactly.
That's encouraging. There's a lot of people who have this pie in the sky dream of they want 80%, 90%, but you don't need that. Statistically, that's not a requirement.
But it's also, like me and you, we've seen a lot already, you know, it's, I talked yesterday to a crazy guy, and he showed me, I made 400%. And I said, thank you very much, bye-bye. And we're talking about working, trading together. Now, we are all, I'm an old guy, you're young, Corey, you know, to make 400% in 1 year, how much you must risk?
Right, of course.
His drawdown was 80%. I said, not being arrogant, but find somebody else. You know, I'm.
Right.
This is not normal.
That's
in my
not
world.
a sustainable strategy by any means, of course.
Exactly.
Right.
Exactly.
And if you've been around long enough, you know that. There are some people who are new to the market and they've had a run of luck, but those people will soon be,
overtrading, wiped out, burning accounts. Sure, absolutely,
Yep.
absolutely.
Absolutely. No, of course, I've seen it for many, many years. That the people who are slow and steady. Those are the people that not only are successful. Those are the traders that SurgeTrader wants to trade with.
Exactly. Slow and
We're
steady.
not looking for account flippers or
coachable,
punters.
right?
Right. Absolutely. Tell me about a time when in your trading history where you had some adversity. Maybe maybe you had a run of bad trades. It happens to all of us. How do you get over that psychologically? How do you fix that?
Perfect. So still today, it's me and everybody. This is normal. You can pat yourself on the back. It's normal. So you come to 100 samples, and you see that, oh, my strategy has an edge, and you are happy. But this edge also means that you have losers. Losers are part of the edge, and this edge has a drawdown.
Sure.
Like it could be 10%, 20%, whatever may be the case. And then when you go on a live account or big account or partner up or you buy $1 million Surge account, we tend to forget about the drawdown. So I was on the demo, backtesting and doing those samples or the hard work. I have an edge, I'm happy. Now I'm on a real account, it might be a demo, but it's real.
Mm-hmm, sure, of course, consequence.
And it comes loser, 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 winner, loser, 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 and like me, I believe, okay, right, 99% of us, we start to think, oh, this strategy doesn't work. Not true, you just forgot that you have a drawdown. And for the people who know, for the traders who know that what is random distribution, you don't know how this drawdown is going to appear. It could appear loser, 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 or winner, loser, loser, winner, winner. You don't know, but we forget, and we tend to change strategies. And this could go Corey for years. Unknowingly, subconsciously, you believe that you are doing the right thing, and you need somebody with a bat to tell you, don't do this anymore.
Right. So the distribution, that's a good way to put it. So you might have more losers concentrated, but over your big wide sample, it's all the same.
Exactly, it's calculated risk and it's all normal. But
how do you coach a trader through that? Somebody just comes on the account, loser, 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 loser. It's stressful. How do you convince them that that's just part of the random distribution? Oh, with the baseball bat.
Like this. No, I'm joking. So it takes some time, of course, but it's the constant spaced repetition of the ideas and the concepts. It's working on ourselves. So me as a coach, I'm working on the trader student. Like, money is not money in the financial markets. Money, it's raw material. If you understand money in traditional sense, you're going to be emotional and skeptical, and you are going to be afraid of losing money. And people tell, no, not true, boss. All right, you should risk $1,000 on this account. $1,000, it's 0.5%. Why did you risk 25? And then the guy goes, yeah, it's true, right? So
right.
It takes time, because now people get bored, and some people say, oh, this is baloney. This is psychology, and we are literally programmed, we are programmed to I mean, think with me, Corey, if the environment tells you, if you lose money, if the environment tells you that you're stupid, that you're a moron, and criticize you, and then we tell you, oh, just accept the loss, losses are part of the game.
It's hard.
It's hard. Not that easy. It's not that easy. It takes some time.
Right, absolutely.
If you're coachable and if this makes sense to you, otherwise.
I think that's one of the reasons having a mentor is so important, right? You need somebody who's been through it to tell you, no, this is normal. What you're facing is normal. Because a lot of people will they'll take those losses, even if they have a good strategy, and immediately they'll be disenfranchised with trading, and they'll leave it. They'll leave it too soon. And that's what we see a lot. Having somebody to tell you that it's okay, keep going, such an important part of the game. Even if it's once a month check-in, I think mentorship is the key to getting over that hump.
Exactly. When Vantar told me that I was stupid in front of other students, and I was angry at him, and I was thinking, how he dares? I'm paying this seminar or webinar, I'm paying this class, I'm a paying client, how he dares? He shouldn't talk to me like this. He knew what he was doing, and I got back to him back in time, and I thanked him, and I said to him, why didn't you tell me this before? Answer, I was afraid of losing you as a client. Because he's selling a course, right?
Sure, of course.
But
Why did he decide to tell you then?
because I was not doing good,
Oh, I see.
and also in my group or when I'm coaching, with time, right, we get friends and we know each other, and I'm not going to always, oh, you're doing good. Sometimes we need a wake-up call.
Sure, of course.
If I'm telling you 3 months, don't do this, and you keep pushing 3 months, I'm going to, maybe not yell, but I'm going to come like this to the class.
Well, at the end of the day, you have the customer's best interest, right? You want to see them succeed, and sometimes it does take a wake-up call. So that's good. There's a lot of mentors out there who, a lot of hand-holding, like you said, back-patting. Sometimes, training's hard. It's one of the hardest things out there, and being, frank and direct a lot of times is going to be helpful.
This is what I love about SurgeTrading, because you guys, you do care about your clients, about the traders. This is why this show is up, right? So this is where the great differential. This is why I tell everybody, go with Surge. What about
Awesome.
others? I say I don't know, but Surge, has the interest, and they're like me too. You have different mentors, and you can see, or in any aspect, any business out there, sell you a cell phone. It's just a sale. And somebody's going to sell your cell phone and call you, oh, is it working? Do you have any problems? And the same is in here, you could be just selling a course, a coaching, like, it's 1 hour and get out, next client.
Right.
But if you have a genuine interest, then you're going to work with the guys, like you guys do.
Absolutely. No, thank you for mentioning that. We certainly do take a lot of pride in that. Share with me a little bit about your experience going from trading your own money to trading with a prop account. I know you've been with us for probably 2 years now.
Sure.
But if you could go back in time, tell us about that transition a little bit.
So, great question again. It starts with the demo account, right? Demo account, we tend to, it's less, I'm not going to say it's zero, but it's less emotions because, you think, or just subconsciously you think, it's a demo account. So what? Mm-hmm. When you trade your own money, it's a little bit difficult because it's a real money, it's a real loss. But it's still much easier. When you trade third-party money, then we come to, not everybody, but some of us do, I did, we come to a problem of self-image. And people tell, no, not true, I'm all right. Well, it's subconscious.
What do you mean by that? I don't follow.
Exactly. Thank you very much. So self-image means I am subconsciously worried what Corey is going to think about me. What SurgeTrader is going to think about me, or whatever might be the case. And I have it happened 2 weeks ago. I have a student. He was doing good with his own money. He got an account with another asset manager, and he signed a contract. And his account, you would not believe it, Corey. I can show it to you. In that day, you can see the account just going down and down and down and down.
Really? Do you think it had to do with the controls, like the drawdowns? Was he, because for a lot of people, that's one of the scarier parts. There's guide rails on prop accounts where he didn't have any before, so maybe his drawdown was a little bit bigger. Where do you think he went wrong?
Also, so it's twofold, right? Number one, this trader, his name is Safe. I can tell him I have his authorization. Mm-hmm. So it could be a self-image problem. What is my wife going to think about me, my kids, or simply the prop firm. They're looking at me. It's and the second one, it's again is the money problem. If I'm 45 and for 45 years I was used to manage $5,000, paying the bills, expenses, losers. Now on a $1 million account, subconsciously again, $50,000 loss, it's not going to be normal for you.
Right.
Maybe intellectually you have the good intentions, you're planning, good plan, good intentions, but the execution, you're going to have problems.
Absolutely.
So trading is similar to boxing. It should be, my opinion, it should be step by step. The boxing, you go to your first match, the coach, it's already certain that he's going to win, so the self-esteem goes up. And trading, it's quite similar. It's still a learnable skill, but we need to train our emotions. So emotions or psychology, it's a big part. you know?
Right. Absolutely. I certainly agree. I mean, so going from, like you said, $5,000 account even to a $50,000 account is a big jump for a lot of people, and they're not prepared for that. Like you said, boxing, that's why they have weight classes. So we do see some of the more successful traders graduate into those higher levels as they become, I like to say, calloused emotionally. Their emotions kind of harden a little bit. Because
Exactly.
if you have a $5,000 account and you go to $50,000 account, now your losses are a lot more. Your wins are a lot more too, and that does a number to you psychologically.
And people tell, so online, right? Social media, Instagram, WhatsApp, everybody, it's percentage based. Yes, it's percentage based, but it's not that easy,
Right, of course, because at the end of the day, it's really not percentage based, and that's where those traders who can separate the money from the process, they make a better strides.
Exactly. Now, listen to this absurdity, right? This is from the classes, right? How would you feel if you would lose $100? And people say, nothing, all right? What if this $100, it's 50% of your account? And they say, I would still feel nothing, which is super, it's all right, but, you don't feel anything, but you are doing, in practical trading terms, you're doing something stupid.
Right.
So you are totally at ease, burning or risking 50% of your account, but you have problems when you should risk $10,000 on a trade, but it's 0.5% of the account.
Absolutely. And that goes back to process. So you're damaging yourself psychologically in the long term by losing 50% of the account and being okay with it.
Exactly.
So, as a rule of thumb, what are you recommending your students? Of 1%, 0.5% risk per trade?
0.5% risk per trade. If you want a number, it's up to you, but 0.5%. Professional money managers risk 0.5%.
Right.
And then they build the position. If the trade goes their way, build the position.
Yeah, absolutely. So when we see traders and educators, mainly traders, come in, and we could tell pretty early on by their risk profile, their longevity, right? Statistically, people who are risking 0.5% fare much better than people who are risking 5%, 10% of the account. That's not a real sustainable methodology.
Exactly. But it's we cannot judge the guys, I believe, because it's a lot of education.
Sure, of course.
If you don't know what is random distribution, you are not going to. Unless you learn what is random distribution, you're not going to risk 5%. It would be crazy.
Right. And that's why there's such a small percentage of traders who make it. Like we said, this is a hard game. People hear it's only 5%. They don't understand 0.5% is sometimes too large, right? So retraining them, like you say, coachable, but making them understand that's such an important aspect of trading. And that's the off-the-charts stuff. That's the non-technical analysis stuff that really gets in people's success.
Exactly. As I say, 90% of world population, it's not stupid. You have doctors, lawyers, movie stars, Uber drivers, gardeners. It's a learnable skill, 90%, but, are you coachable? Are you for real? It's like university, you need to study and, again, being coachable for the fifth.
Yeah, absolutely. Tell me about a success story from a trader that you brought from trading his personal account to a prop account.
All right. Can you be more specific?
Yeah, of course. So let's say you had somebody who was trading their own personal funds, and then you encouraged them to go with SurgeTrader. Give me the kind of how their journey went. Was it successful, not successful? Give me a story of somebody who transitioned.
All right, so Israel maybe, it's, well, there are different aspects of success, right? So number one, if you ask me, the minimum viable account to make it in the Forex market, based on calculations data, it's 10,000 US dollars.
Mm-hmm.
And it's not pleasant to hear, because people maybe don't know that, with 500, I have $500. You're going to lose the account.
Right, of course.
I have $2,000. Most likely, I'm not God, but most likely 95% you're going to lose the account because of the volatility and the swings and the stop loss and but there is John or there is Jin Hao or Kwang Kwong in so okay, but it's one inside trillions and billions of people. So you need to have 10,000 minimum if you want to play this game, if you want to listen to me. So this is where prop trading comes, right? I can buy a $10,000 account. So this is one success story. You know, people were already good traders, but they didn't have enough money. They just didn't know. So Israel, you know, it went and he bought the $10,000 account, a little bit of psychology, you know, oh, it's not my money, and what if I burn, and there you go. And otherwise,
And
the
then-
other rest, yes.
He was able to change his behavior, and what was his? He went from non-profitable to profitable.
As always, this process, Corey, takes, they want number 6 months to a year. Not that easy.
Sure,
And
of
again,
course.
it depends on the guy. So if I work on myself once per day, it's like learning a language. If I work on myself for 1 hour per day, every day, this would bring a result in this time. But if I study the language 1 hour just on Mondays, then the time spent for you to reprogram and to unlearn and to change is going to take much more time.
Right. But you think a minimum of 6 months for success?
On average.
Yeah, which is great for somebody with a mentor. You know, doing it on your own, it could be never successful, right? So if you get a mentor, you're following the plan, you're coachable, you could bring it down to 6 months. You know, that for a lot of traders, coupled with prop trading, coupled with SurgeTrader, that's hope. I mean, in 6 months, you could be out of whatever situation you're in.
If I'm honest, in my group, everybody complains. Oh, it's too much. It's the if I'm honest, right? I'm honest.
Yeah, right, of course.
People lack patience. Or
Sure.
maybe not patience. It could be a word, or vision. Vision. This is a long run, you know. I know you want the
Right.
Lambo that Corey has, or the Ferrari Corey has, but you know you can have the Ferrari in 5 years.
Right.
But it's impossible. If you ask me, you know, I'm the one of a small group of people who tell everybody, you know, it takes time. You're not going to get rich in 1 year.
Of course.
I mean, I hope,
Yeah.
I'm rooting for you, but most likely not, you know.
Mm-hmm.
And so I believe people lack patience or vision or motivation. My opinion.
Right, no, of course. Share with me a little bit about some of the principles you use on the charts. So I know you're using technicals, or you encourage people to stay with 1 pair, 2 pairs. How are you analyzing the markets?
Excellent question. So it depends on the level where you are. Start small. You know, if you are just starting out, start with 1 currency pair. Make it alright that you understand what you're doing, you are conscious on what you're doing, everything is under control, then jump to 2. If you're going to trade like crazy, then, you know, it's, again, you're going to nobody's going to die, but you're going to relapse. And then
Right,
again
right, of course.
on the right track, and then you're going to relapse, and then on the right track, right? And so if I need to choose one, it would be called alignments. So alignment means how many. Me predominantly, I'm trading the Fibonacci.
Mm-hmm.
I don't have anything against Ichimoku or other methodologies. It's just my style and my the tool that I use mostly. And to have a high, it's trading. It's a game of probability, right? So when the higher the alignments between the charts, monthly, weekly, daily, and the 4 hours, it's my trading time frame. Then the better the probability.
Right.
We say if this and this and this happens, 7 times out of 10 is going to be a winner. It still could be a loser, but not 7 times. You could win 3 times, but 7 times is going to be a winner. And share screen. Give me a second.
Yeah, of course, take your time.
All right, do we see a chart?
Yep, sure do.
All right, so tell me currency pair, Corey.
Euro USD.
Euro USD, all right. So just an example, right? And here, Euro USD, Euro dollar, all right. So now this is the monthly chart, as you can see. And this guy here, the color is, so this is the Fibonacci, right?
Mm-hmm.
And you can see the green lines and the blue lines. So we say, all right, long term, this pair, it's supposed 7 times out of 10, no guarantees, it's supposed to go down, right? Based on what you see, I mean, I'm going to simplify, right? Simplistic approach, not to take too much time.
Of course.
And then if you go on the weekly chart, give me a second, so out, and again, you see the blue lines and the green lines, right? Mm-hmm. And zooming in, this was from the technical class. Give me a second. So you can see here that the market was doing different stuff, but the market made the pattern that we call crown, lower low in here. So this makes the prediction that after the counter trend line break up in here, you know, again, 7 times out of 10, this market's supposed to push down. And also this high here, you know, I don't know other people, but I was shorting the euro dollar, you know, so you don't see the future. Here I was shorting the dollar, and because of the hard time frame, you know, and this is, if you know, it's a lot of also technicals, right? You must understand what is happening. So the market broke this low, right? So this was a low, and the market broke the low. So this market is not in an uptrend anymore. It's a signal to go to a downtrend, right? And so far, if this is the relevant high, if this is the first low, and now it's a lower low, so the monthly chart plus the weekly chart, simplistic approach, I believe in the long term, the long run, this market is going to fall down. And 1, 2, 3, 4 weeks, it already starts falling. Now it's in a retracement, right? Mm-hmm. And then you go on the weekly chart, you know, and similar story. If you zoom out, give me a second. So the green and the blue are similar, sometimes are overlaying, you know, and again the market relevant highs and lows are down. And from the daily chart too, this would be the relevant high in here, you know, and you zoom in the chart. Now this is the daily chart, and you see, all right, this is the crown from the weekly we've seen before, you know, and now here you have the Fibonacci sequence again. This is the Fibonacci, you know, and now I'm waiting. Now, again, you have other stuff, right? Candlestick formations, trend lines, pivot points, but now I'm waiting for this market to break this one, and I'm going to short it, potentially doubt here. And stop sharing. And
yeah, overall, a fairly simplistic strategy, right? It's not super complicated. You could teach somebody. So really, where it's going to come in is risk management. So share with me the risk management strategy of that strategy.
I have different models. Can I be more specific? Do you want just our stop loss here, take profit here, something like this?
It's that simple. So basically, you're using that edge, that 7 out of 10 times that you expect it to go your way, and you're just managing the trade.
If when you learn the Fibonacci trading has rules, right? So the stop loss goes above the A. Sure. And inside the Fibonacci sequence, ABCD, the retracements. Let me share again. And so if this is the daily chart, and I'm going to delete this one, delete. So if this is just an example, right? Because there are different models, but the black one, now this is what it's called the A. I just didn't write, so this is the A up in here. This is the stop level on the Fibonacci pattern, right? So if you enter at the green levels, you would risk, example, 0.5%, you know, and if the market retraces to the blue or the red, you would risk shorting the market, maybe 1%, example. Because of the risk-reward ratio, now this is Fibonacci theory, if the market retraces to blue, you are going to profit take at the blue, and if the market retraces to the green and inside the green without touching the blue, then you're going to profit take at the green down in here. So the Fibonacci tool, Corey, it's a great tool. It gives you direction, it gives you a visual how to manage risk. I'm not if I answer your question, if this is what
Yeah, no, I understand.
you were asking. It's a great, now again, this is just an example. You could be managing differently, right? We have
Sure.
also a methodology. It's called set and forget on the pattern, right? You have a market where maybe something like this, and the market is retracing, right? This is more suitable for people who have jobs, and you say, all right, you're going to risk 0.5%. You're going to risk 0.5% on this pattern, you know, and you're going to split this 0.5%. You're going to buy here, buy here, buy here, buy here, and stop loss down in here. And if everything goes to bust, you're going to lose 0.5%.
Right.
So this is more for people who have time. This is more suitable for who have a job, you know, it's 8 hours at a job or business, whatever. So you can pre-caliber or you put pending
right.
order.
Set your stop loss up, get it ready beforehand. Awesome. That's great. Dude, I love a simple strategy. There's a lot of times people put way too much confusion into strategies, and particularly for new traders, it becomes overwhelming. You know, we're really, at the end of the day, the risk management of the strategy, just letting probability take place, is where most successful traders live.
If I can give a suggestion, you know, talking about strategies, the strategy must be, you must have rules, black and white, not subject to interpretation.
Sure.
This is a big deal when, if you want to come to an edge, Corey, and you say, oh, buy the uptrend. Well, buy the uptrend to me maybe something different to you.
Sure, right.
So when you're collecting samples, you are not collecting samples in the right way. You are working hard, but in the wrong way. This is
Right. I feel like many people fall into that trap, not only in trading, in all of their endeavors, right? They're not doing the right thing.
Sure, and again, you know, everybody, you know, pat yourself on the back and don't judge yourself because it's not your fault. But there is a lot to learn. There's a lot to learn, you know.
Mia, tell me this: how do you incorporate macros, like, you know, economic news, into your trading? Do you go over that?
Sure, you have I use the Forex Factory website, and every weekend I check the news, what is going to happen Monday, Tuesday, Wednesday, Thursday, Friday, and that's it.
And you have rules. You have rules about that, where you may not trade certain days because of FOMC, for example. Maybe you stay out of the market, or are you going to just use technicals on those days?
Great question. So the answer is, this is personal to your strategy. Me personally, I trade from the 4-hour chart and the daily, so the news 7 times out of 10 is not going to affect my stop loss. So I really don't care if it's good news, bad news, or whatever. But this is personal to me, to my strategy. Somebody else who's on the 15-minute chart or 1-hour chart might decide to get out. If he is in a profit, might decide to close the profit. Or maybe, you know, just like sitting there and, okay, I have my stop loss and let's see. But it must be rule based.
Sure, of course. Too many people with you know, the discretionary trading accounts, where, you know, one day they're rule based, one day they're discretionary. You know, it never ends well. So, you know, like you said earlier, the discipline and understanding the process and following the process, those are the big keys. And I think once people understand that, and that switch flips for them like it did for you, and they're doing the actual work, doing the thing, you know, much greater chance of success.
Exactly. I agree completely.
Awesome. Well, Miha, I really appreciate you joining me today. Thank you so much for your time. And we hope to have you back soon and share some more insights for our traders. Where can people find you? And we're going to put it in the description of the video as well. But let's say somebody wants to, you know, interview with you and see if they're a good fit for your mentorship. How could they find you?
So I'm training the retail clients of Dukascopy Investment Bank. So maybe this would be a place. It's on YouTube. It's for free. You know, they just join. Otherwise, it's email or Skype. I'm building the website. Awesome. I don't have it yet, so.
Very good. Well, if you could send me the URL for the YouTube channel, we'll add that on there as well.
All right.
Awesome. Miha, thank you so much, and we'll see you soon.
Thank you very much, Corey. See you next time. Thank you.
My pleasure.
Bye, my pleasure.